and welcome to Tradespotting. It is Thursday, October the 21st, 2021. I am Tradespotting, a professional and classical chartist. Gamestop and AMC are unlike other tickers in that they can change the world. Their potential is very different from others. So I'll help you trade anything and look at any ticker you'd like me to. This video will cover everything that happened in price action today and where it's likely to go, and everything you'll need to know ahead of market open tomorrow for those two and anything else you might want me to look at. If your goal is to change the world, I'm happy to help you do that in any way I can. And if you want to do the same for me, then hit the like button, read the description, and take part in all the things going on. And be nice to each other in chat. Thank you very much for joining me. These are the charts. At the minute we're looking at GME. I'll quickly go over and see if there's anybody here in the chat box and say hello to those who've arrived. Where is that? Yeah, somewhere over here. Where are we? Box. Hello, everybody. And thanks very much to Max Greenwell. As you can see, his name's here beside Max Payne. Brothers, maybe. 182.5. That's Max Payne for the week. Other things to celebrate this week are Nathan, Vic Vince, Harry Sidhu, Cosmic Lightning Warrior, and Daniel Assange, all of whom it's your anniversary today of you first supporting the channel. Thank you so much. It's really deeply appreciated. Everybody who does, thanks. Every possible way, thank you. More about that in the description if you'd like to help. Price of GME closed today at 181.71. And that reminds me to start the timer. Here is that Max Payne on a chart, a little clip of it. And as you can see, this is where most contracts will expire out of the money, i.e. most contracts, the fewest do. And so those people there that'll be exercising, actually quite a small percentage of all those people trading on these instruments. And then above here you can see the chart, a little snippet of it with our likely support and our top side resistance. Chris Sweeney, Super Chat 684. Our revenge will be the laughter of our children. Excellent fucking quote, legend. Thanks, Chris. I have never asked, or TA, if I have earned any distinction in your mind to care for and love me as much as I love you. Please hold my hand and guide on shorting Trump's SPAC, DWAC. Please, I implore you, beseech you, please. The Ghost of Dan. Well, Trump's got a SPAC, has he? We'll do the TA on Trump's SPAC, DWAC, if that's what it is, and I'll give you my honest opinion of it. DWAC. I'll give you my honest opinion of what the chart tells me, and of course I'll tell you, Dan. And you've never asked me for anything ever. So I consider it a privilege to be able to return some of the favors you've done me. And that was a very, very generous donation. Thank you very much, Dan. And Chris. DWAC. I certainly shall look at it. Oh, there's another one. Shane, you legend. Super Chat 684. Jamie, can you look at SWAC? Nope, that's the ticker. I heard it's a great company. Okay. So that's two donations. It's made it up. Definitely going to make it onto the show at some point. Thank you very much, Chris, Shane, and Dan. Wait for Jamie's face with DWAC. Okay, there's something to look forward to. Is my mission to short it? Is it? You know, if you don't like things, there are times to short it. But those times are obviously when it's at peaks in the market, and we'll cover when those likely come. Should there be any, I'll do the TA on it as good as I possibly can, but it stands the test of. Thanks so much for everybody who donated. Hello, everybody in chat. Everybody seems to love DWAC. I see is all there now. See is all. Let me get into the live studio thing so that I can get a big view of your hello properly. Here's one. I was going to ask the same thing. Well, there, Alan. How you doing, Alan? Good to see you, my friend. We're all going to get some good content then that we enjoy seeing, which is excellent. 81 of us here. How fantastic. That's a great start to the show. How many likes did we get? 60. Good start too. Not bad at all. Thanks very much. I shall share this video myself so that everyone knows we's here. And when I'm here, I'll say hello everyone in chat. Thanks very much for everybody who interacts in the chat box there. It's really appreciated. Look at your phone, blah, blah, blah. Yeah, there you all are. Thanks so much. And I was going to share the video. Yes, you can all do that if you are watching on a phone. Super easy. Click the share button and then you can go straight to tweet. You don't even have to write anything. But if you did, like, oh, excellent. Apparently it's dead easy. Finding it a bit crap because my thumbs are so soft. Yo, phone. Cheers. Tradespotting is live, the best DA and everything you need to know. Yeah, that'll do. Hashtag GME AMC. Thanks for everybody who shares it or retweets my thing. Thanks so much for everybody who spends a minute watching the channel, and especially those who hit the like button. It's really appreciated. Hopefully everything's still working. Is the stream still going? I see my face was off camera, hidden by these things. I need slightly better. Hi Sarah. Hi Z. Hi Barry. Hi D. How you doing? And there he is. Duo Maxwell. She. He. Who knows, right? R.I.P. I think that's Duo. I think that's friendly Duo who we see every day, and we all know the answer to that. Hello. Hello. Ra 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 ra. Yeah, I can say that right. Hello, Falma. Hello, Bad Mama Jama brother. Hello, Rocky brother. Hello, Ghost of Dan brother. Hello, everybody. So everybody be nice to everybody. Please be nice to the heroes. Heroes and those people. The spanner, like yourself, Bad Mama Jama. Thank you very much. You have been knighted the Knight of the Realm. Bad Mama Jama is now a Knight of the Realm. Congratulate him, everybody. He comes with now a huge sword. Some people call it a spanner. But that's just because it's got such a high degree of utility. It is still a sword. Chris Sweeney, can we get Trump's family working in McDonald's? McDonald's? I think they've got a minimum wage of something like 15 quid. Darn good to that, to be honest. Here's one. Hey, legend. Hey, Tony. How you doing, my friend? Oh, I do like to see a ghost around. Great to see you. Tennessee Texan, the ghost of Jen. Would love another peek at Sam. If you have a moment today, you betcha. I wonder what it's been up to since I last had a peek, Jen. Thanks very much. That's generous. Thanks, Chris. Yeah, I think we might be able to do something. I mean, at least it's one of the extended family, right? Most of us have got second cousins we don't even know about, so the chances are. Hi. Hey, excellent. Idaho. How's it going, Idaho? Tradespotting, chick, quirky, humorous, eclectic, and the most insightful TA technician in the YouTube space. Boom. Look at that. Alliteration. Quite a nice choice of adjectives too. Delightful. Thank you, my friend. Chat full of legends. You're telling me, Shepard, yourself among them. Thanks, everybody. There is another one. Stefan. Thanks, everybody. So let's get in and look at the TA, and we will see what happened today. Welcome, everybody, one and all. Is it wrong? It's grievously wrong. Has been for a while. There are a number of bargains afoot. There are also footsteps above, so if you hear them, please excuse them. Just my lovely neighbours. And here we have the charts. And this time frame, 4 hours, significant. You can see we've just got our most recent lows, where you're cut off by the RSI itself, paints to some people's eyes clearer picture of what's been happening. Those definitive movements, all outlined with these simple demand and supply lines. This period of time coincides with Lux on Rocky Outcrops DMI, whereas our moves to the top size quite distinct, distinguished, obvious. And as this indicator comes before the moves, often predictable in some senses. And here you have in between these two excellent indicators from Rocky, the MACD, which talks about momentum. Now there's various ways to use this indicator as a signal for taking trades or exiting them, and alternatively just as an overall momentum check from big picture TA. You can use that type of thing on every time frame, but bear in mind momentum is only useful if you've already established your trend, as is every other aspect of your technical analysis, in particular volume. Knock knock. Hi neighbours. If you're just arriving, hit that like button. Thank you very much, and be nice to everybody in chat, especially Bad Mama Jama, who's recently been knighted. So this is that price action. These are those indicators, and now as I double click here, I have GME on the screen. Ololonio, and you can see now more clearly the drawings I have here. The diagonal sloping downward line that covers from January and is projected into the future here around mid-December. That covers a significant period of time frame, obviously, and is where we're likely to meet resistance despite the horizontal levels should we reach it at certain parts of our x-axis. You can also see below here we have a green line also coming in at a similar angle to this red one. It's our upward sloping demand line, 420. You want to bust a rhyme one more time. Thank you very much. For hopes and dreams meet ends and memes, as sponsored by Justin today. Thank you very much. Underneath here we have this demand line, this green demand line. It meets the red in around that mid-December time frame. That's what you would call the apex of this formation when you combine these two lines. Talk about a pattern. I've also projected it into the future beyond there to represent what may be future formation that GME falls into. Next week news today. And as you can see, that parallel line on the top side, which would have 1, 2 touches so far, and a third would confirm it as significant, may be where price action ultimately goes should it break out of this equal opportunity triangle, also known as a pennant, that comes at the top of a bull flag. This bull flag, as you can see, comes in for a number of different places depending on how you like to do them, right? Maybe you're very, very optimistic, in which case you'll take it from down here, which is a similar low from where our Fibonacci-based time zones come. As you can see, that defines this low, this high, this low, and comes in at around the apex of this formation, which we're currently in. Some people call it a wedge. That's fine. Call it whatever you like. Your choice of language and particular words don't matter. But if you want to truly understand the psychology that makes these patterns tradable, then I would call it an equal opportunities triangle. And I would say that what likely happens from my experience is that you come up and change the formation and put in, thank you very much. Is it GameStop or Game On? Game On, Chris. Game On. Could be any ticker. But it had to be GameStop. could have been any time, but it has to be now. And it could have been anybody's fight, but it's yours, whether you like it or not. And that's why you can't stop buying GameStop. So you're looking at this formation, and what they normally do is they take a move outside of it that isn't the full measured move, or even the 60% that most people would trade for should they be trading patterns. But it's within what would be considered a fake out zone, and that might be 10 or 15% on top of the price, or it might be above and beyond specific horizontals. The horizontals I find most interesting, just from those drawings already on the charts before I clutter things up, are this most recent formation, as you can see, identified with this pattern, slightly blue in the background, with an X, an A, a B, a C, and a D. This is a harmonic. It's a Gartley. It usually comes at the end of a trend. And it certainly is coming in at the end of a period of consolidating price action that has defined our most recent trend. That's also clear from the name of this equal opportunities triangle, that during it, price action has been neither to the topside nor to the downside to any significant degree, and as such we call this consolidation. And that means that the important part of this whole formation is therefore in and around the median line of price action since it's been here, which forms the center. And that's the nature of an equal opportunity triangle. As I say, it usually breaks out one side or the other, and before it does its measured move. And a breakout to one side that then reverses can be very strong to the opposite side of that previous move. One that confirms on a retest, or doesn't even need a retest, but goes on and breaks that horizontal and retests it on the way to higher moves or lower moves, is again very, very bullish. So there are areas within it that you'll be able to adjust and make adjustments with regards to your position to have the best possible opportunity. And if you plan for it in advance, then you're able to make the most of those chances. And what we then are able to do is, if you can spot an opportunity before it comes, you can define where the starting point of that opportunity might be. Now, this opportunity that we discuss with GameStop, and how I talk about this formation and the nature of its equilateral opportunities, those breakout or fake out areas either side of this particular downward sloping supply line or this upward sloping demand line, and those horizontals that will define significant levels beyond them, that's not the be all and end all of price action. And although it speaks to very, very high moves, if you, as we'll see when we go on and look at other time frames and talk about other indicators, it doesn't necessarily say that you just need to buy it and that'll be fine, right? There's various areas where it's better to buy it than others. And especially if your psychology is affected by holding a position that may be going against you, in which case you're going to want to get in at the best possible time. And if you alternatively add to that position over time, then it can only benefit you from doing regular technical analysis on that asset and understanding the nature of its own oscillations and where you might get a bargain in future. And that bargain coincides with when you've got available liquidity, all the better. So tune in. I'm here daily doing these things and desperate to help everybody make the most. If you're trading GME, like I say, it has the potential to change the world, especially GME, but also AMC and other assets that you might be trading. We'll take a look at all of them. So stop drawing on the charts when I don't mean to. So there is a move, and on the top side of this is the target from this harmonic. That is the 1618 from this previous move, your high to your low on this A to this D up here at 1618. It will take you up around, depending on where you drop these things in, that might be up around $290, pushing it above even the fake out area from this formation that we were talking about before. But on the route there, you've got horizontals to look out for and perhaps a target on a shorter term move that would make it clear that price action was then very bullish once you've drawn this framework around the charts and you're thinking to yourself, well, where is the best time to buy GME, and how can I make the most of my investment? Well, that's all you'll hear it often. People say buy it when it's cheap and then sell it when it's high. So you don't want to sell it when it's nowhere near as high as it's going to be. But when you're putting in price action that's moving this distance, this range, this percentage of its overall price on a daily basis, and puts in trends that take it significant percentages of its total value, then entering can be very important at this stage of your GME journey. You can save a significant amount or increase your position by a significant degree by trading it carefully. Can you tell me what chart you see the gap at 420 lol? It's Justin. Can you tell me what chart you see with a gap at 420 lol? Yeah, I can, Justin. I can look at that after I look at DWAC Sam, and then I'm going to get on to, thank you very much, 420 and a gap at 420 from Justin. So I'll look at that ticker, which one I suspect it is, shortly, after I cover just what I'm trying to wrap up on this narrative of GME, so that people who are trading this at the minute get the best perspective. Right now, I'm not trying to talk about how good my channel is and this information is and how I say it better than everybody else, but you can make your mind up about who does it better, right? All I'll say is that this is the way I would go about it, and that most recently your best starting point of an opportunity was this D area. And what I say to Doomslayers is that you buy at support, not at resistance, and this is quite clearly on my chart what I would find to be support. Badman Majama super traded $5. Thanks. I don't know why I'm drinking a pencil out again now, or that's thanks. Right, so this is the starter point of opportunity at this D point. You're still quite close there. The retests on the way, we'll talk about those in smaller time frames, but you might be able to manage your position and enter trades here, right, at these areas that I'm going to talk about, and aim for higher levels. But there may also be, as we talk about resistance on smaller term time frames, let's talk about those things too. Thanks very much, everybody. And what I'm trying to cycle back to here is that the measured moves from these various things could take you into certain other areas, at which point, you'd very much not be at support. You'd definitely be at resistance. And let's talk about those now. The 1618 move off this Gartley pattern up at $300, give or take, is a very good target to aim for in terms of thinking like, well, getting in before there, should you be like of a long-term time frame, you might think anything between here and there is good. Or you might look at this and think of that simply as confirmation of further moves thereof, the bullish thesis continuation of that, and where those next places might be. And that area that you're looking from this most definitive, I find, most definitive and interesting technical entity on the chart with regards to where the most recent price action says the most important next levels will be, is up around this 1618 at $300. But getting there means you need to go beyond other targets that this same harmonic might point towards, which will take you up at around $250, rather than just the overall Fibonacci from this part A to D. The actual target from this harmonic might only take you up at around $255, $256. So like there's those two ideas to aim from this move here, which is defined by the A to the D. One, the harmonic, the other, that's Fibonacci move, is up here. And they also break other levels that might form to be resistance in at around $230, $220 at this previous horizontal, which is your A. And any of those there or below that target, that wouldn't be a definitive break of this equilateral formation. That wouldn't be the move that people who call it a wedge are looking for. Though when it gets there, they might get excited, right? Because maybe they don't understand the psychology of what's going on behind price action at the minute. It might be. And this is perhaps a better way of looking at it. These would be your levels of resistance, and so manage your own expectations along those lines. Then you've got other levels to aim for, like this downward sloping demand, that supply line here, which I think is a magnet for price action, and very, very likely would go here soon. Below that, you've got the 618 of this Fibonacci on the A to the D move. And that's a golden pocket where price actions very likely go to if it holds and breaks and holds the 236, which it's managed to do, and is now retesting it here, which is a very good re-entry. You might think that's now talking back down below towards now talking about support instead of resistance, and those areas are so very close to where price action is at the minute. You can see here's your 200 period moving average and your 50 period moving average on the 4-hour time frame coming in here. Maybe you can't see them, but that's what it is, right? We'll zoom in. Slightly easier to see. Why not? There's no need to make things difficult for people. So you've got this 50 period moving average. You've come in, wicked off it. Chris, how many GME shares would be needed to wipe out Rupert? Wipe out Rupert? Well, it depends how long that you want to take about doing that. I mean, I don't know how long has Rupert got left? Speculate on that isn't particularly what I want to start doing, but to answer your question properly, right? You wipe out might be like this very people like Rupert Murdoch clearly have a lot of different pies on the go, and has a hedge against his own demise, I would imagine. He strikes me as that kind of guy who would have something in his back pocket should everything go to shit. So it might be very difficult to completely and utterly extricate him from how your world works right now, especially on your own. And accumulating GME shares, you possibly just need enough to shock him. So rather than enough to do any damage, just enough to be enough of a shock, and then deliver that message at a time that he was most sensitive to hearing it. And then, you know, so I'm not sure, Chris. Like, there should only be 76 odd million of the things, but if you were to just, you know, I'm Chris. He's just happens to be sensitive and thinking about shorting the thing at the time, and it's just broken a horizontal to the top side that he's surprised about, around $343, and you could just tell him you own a few million of them, and that might annoy him so much that he pops his clogs right there and then. It's definitely possible. A lot of people will be on that end of the stick, unfortunately. I feel sorry for them. Think of it as like, and it will be like this, you know, because people have ignored it for so long in the mainstream media. What will happen when GME pops? It'll be like Orson Welles' War of the World. People will at first think that when their news is interrupted with this atypical content, that the aliens have invaded, that everything those people they thought were crazy has gone real and started. And then they'll think, no, this must be a play, a show, or I've tuned into the wrong channel. And it's only when they adjust their set that they'll start having heart attacks, right? And if you're listening at the radio and you're in the bath, you know, you got to be very careful when MOAR happens, especially if you're used to listening to the same old tripe from the same old twats. Then when the truth starts to filter through, it's going to be a fucking shock to loads of different people, as would any extreme change in the overall economic situation at the minute, because things are on such a knife edge. Hello, Jam, my Tradespotting, it's Andy A in the house. Hey, Andy A, how's your brother, Andy Lee? Love you guys. Bye, Mama Jam, Super Chat, $5. Great to see you. Yo, 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 yo. Thanks very much, everybody. Thanks very much, bye, Mama Jam, brother. So price action here, we've got our after hours on, so you can see that price action is at 180 here. If you look right at this red ticker, this red on the scale, this is the time countdown in this time frame, which there's 4 hours left of, and it's at price at 181.00. And as you can see, that's taking us on a body close down towards this 50 period moving average on the 4 hour time frame. That would be support. Below here you have the 236 of that very roughly drawn in Fibonacci. That comes in around 170 something. Call it 7. And those are the sort of areas wicks could go to, because when you look left and you see your horizontal support at 177, you've got this breakout, you've got what some people would call a gap. I think that's not really a gap, not on the 4-hour time frame anyway. This wick here comes down close to this body close, and that retrace after this positive move up, that likely forms a higher low, and you are looking at an extension of this line. Whether this be broken tomorrow, come open or not, it's a different story. Whether it truly is there, again, questionable. I mean, you've got 3 touches on it within this little first start, another one here. It is likely that it proves to be interesting. It's touched it once before dropping through on a 4-hour, so I'd still pay attention to it, and I'd like to see how price action moves tomorrow. Below that, you've got your demand line coming in, long-term demand line, and your previous low at this D point with your body closes, and interesting areas with regards to different Fibonacci's, and very strong support at those areas, to the point where everybody knew it at this stage. You put in a divergent low, and that's why price action is where it is. This is a retracement against that move out of this, which I then can measure with Fibonacci, draw on here and see, is your low and your high. You drop below the 236, you may go to the 618. That would be that test at around $177. Doesn't necessarily go there, because you've got your 50 period moving average, you've got your 0.5, and you've got other areas. It'll be interesting from other Fibonacci's, plus this B point. It's just a horizontal support at this stage, so you're looking for that sort of a bullish retrace, and then a continuation of this move that takes you up to those areas of resistance. Temporarily, you'll find one on this broadening wedge, also at the 0.5. That itself is a good place to start, and then look for this 200 period moving average to continue its upward slope and trajectory and prove to be support, having got there, and then test these higher levels. Looking left, that's the 618, the golden pocket. It'll be the downward sloping supply line, and then it'll push you to ask the question of price action. Are you going to go up to 217 to 220? When you get there, are you going to do a test, or are you going to continue on around 225, 227, 230 bucks, top side of that range, and then come back and test the bottom of that same liquidity zone or below at this previous breakout area and downward sloping supply line, hopefully turned then demand? And at what stage are you going to make the measured moves from, already made the one from this wedge, are you going to make it from this overall Gartley, and then what stage does that take you to these upper targets here? Looking left, horizontals from this big drop down, 3 others above that could be interesting. Those are confluent with the moves from this Fibonacci at the 1272, 1414, 1618, and to break 255 bucks, a really important horizontal level, and you'll be testing previous very, very, very illiquid zones. And so where this is tight, where there might be the odd difficult day in terms of price action, watching it move up and down, and so you might have to stay determined through crappy price action. It doesn't go very far. That will all be a completely different story once you break above it. Things are moving fast, and you can expect volatility indicators to represent similar things and lead up to it. Chris Sweeney super chatted. $2. Hey, Rupert, aka Joseph Goebbels. Whoops, I shouldn't say things like that. I'm sure YouTube hates it. Thanks, Chris. I just read in that message, you know. Doing well, isn't he? Hey, Andy A. Rocking video about RC and MOAR. Everyone needs to watch it. Yes, thank you very much, Summer Day. That was a good video. It was a nice interview of Andy. It's nice to interview Andy. Love his voice. Love speaking to him. Good friend, good guy. Big part of the family, huh? But good friend. Andy's a really good friend. Andy A is a nice guy. Andy Lee is a good friend for life. So probably Andy A whenever he gets back on here. Where you been, Andy? You big idiot. Big idiot, yeah. So that's the GME all done on a 4-hour time frame. We can then go back and say on the 15 minutes, what happened today in terms of price action? Vink Vic super chatted. Vic Vince, not Vin Vink Vix. Vic Vin Vin Vic Zines. Vince, it's like so easy. How did I manage to get it like that? What mean illiquid zone? What's the logic of an illiquid zone? Is it market makers have trouble meeting market here. Not so much as that there'll be, it's that if you do take a look at the max pain, have I got that open on this thing here? Well, if you don't have to look at that one website, there are others that talk about open interest, and you look around those levels and you think about where price action is likely to go should it get there based on the horizontal levels of support and resistance, which I outlined earlier, and say like the big gaps between it. Like there's a huge gap between, say on this 4 hour, looking at this price action, should you break above the 0.5 and start going up here and putting in real bullish moves and like break other, you know, back above the 236 on again on this most recent retrace down, you start getting up here and you start hitting 217, 255 is what, why is the chart doing that? Oops, because I was on the replay button. Exit that. What was I just saying? The liquid zones. Yeah, so there's like areas that define themselves as being illiquid because there's much less open interest of any significance at those areas in comparison to the ones that are very liquid, right? So while 255 is the median area of price action since January, and so like there's shitloads of trades in and around that area, and then when you break above that area, Andy, hey, there he is. I'm here, buddy. Of course we are friends. I wouldn't have it any other way. The only TA's guy, there he is, you legend. Hey, just hadn't been reading chat enough. Shame on me, Andy, you legend. Where's your brother, Andy Lee? That's what I asked, isn't it, though? You avoiding the question. Hey. Think, what do I do? Get married, settle down, have kids? Give it all some meaning? I don't know. What's the question? What's the question? So you're asking Dink, you're needed. Right, what was I actually talking about? Liquid zones, right? Well, it was just me talking about, mostly that terminology is like liquidity zones, right? Here's a liquidity zone. And so when you're not in a liquidity zone, that's like not as densely packed with open interest and with likely horizontals that'll be meaningful. And what you'll find is that price action goes there is illiquid and there's not much open interest in that. So then any trade that comes on significant, and when it's significant, I mean, it makes an impact on the overall volatility, in that it usually goes against that previous move because they can see like, hey, you know, this part of the book here, there's like really empty, you know, I'll slot some orders in here and I'll push them there, and like it likely retraces after extended moves, and that volatility arbitrage is heavily traded after big moves, and especially when you end up in like illiquid zones where there aren't many orders and open interest is low, and then you'll go back to a liquidity zone or the top side of one, or you know, wherever the most commonly traded price of that asset was in its most recent move. So that's like why breakout areas become so significant. It's because like so much of it's traded there, you know, like so for example, like and momentum takes it on beyond it. Like so for example, right, let's look at this area here and say, should price action get up and break all, why is that target area moved? Is it me that moved it or does it move? Anyway, back there. So should we break above this 886, right? That's very bullish if you do that, right? You're going back above an 886 and a Fibonacci. It's like, I don't even include the 0 point, right? Because it's pointless at that point. And so after you make it above the 886, where is price action going to go to? Well, it's like horizontally, there isn't all that much to aim for, right? Because there's not been all that much trading in this zone. So it's relatively illiquid. It's just me talking, using words. Like, it's not a liquidity zone, right? You might call it a dry area if you were in a pub and they were just taking ages to serve you. And because of that, you'll go somewhere else. Because, right, so there isn't much going on. And so there's likely other areas price action gets driven to. Open interest will be low. There aren't real reasons to have targets in and around like anywhere between the 886, this A point, your previous horizontal looking left. So when you break above $237 in that, you know, where's the next area, right? It's up at this target, up at 255, and between there, there's like none, right? So it'll just move there. And then when you're above here, it's like this 272 is not a real target, right? It's nor is it important horizontally when you look left. Still not really all that important, and so you'll be aiming up at the 1618 and that, and then you'll be up here because there's far less on the books here stopping it than there is here, and so the open interest decreases, and like, you know, it's like the Sahara Desert, right? Boom, 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 jumping straight up. And anyway, that's what I would just answer. Thanks, Vic. I'm getting it the other way around. What is wrong with my brain? It's definitely sabotaging me. Thanks, Vic Vince, legend. Vic Vince, you know Vic Vince? You probably do. He's in that movie Reservoir Dogs. So here you go. You've got that, and why am I talking about this still? I was going down to the 15-minute time. Oh, that's so like there's areas that price selection will likely get driven to, and like the liquidity zones, and there's those areas that aren't. No man's zone, right? All like Ernest Hemingway up there, right? That's what it's like. And so yeah, that's what you're looking at, and yeah, I am keep going up there. 1618, $300, blah 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 blah. Right? Even if you know, anyway, that's only halfway through what I think is this bullish formation that we're in, which is a long-term accumulation, and which is representative of a company in transition to be one of the biggest in the world. It's just about to join all the top funds, and it's about to approach its most profitable quarter of the year, the first of which it'll have gone through under its new chief executive, and it's amazing news for this company. The fact that we're in on it and there's people out in the media against it is like partly because large institutions know that in future it's going to be so fucking expensive, and like when they sell it to their brokers to then give it to you to trade, hoping to make 5 or 10 or 15%, they're going to want to do that at $1,250, at $2,450. That's what's going to happen to GameStop, regardless of the MOAR stuff. And so I'm here to tell you now, that's what they're doing, buying it all there, doing it at the best prices, putting patterns on charts to make it look bearish when it is bullish, tricking people, not knowing that you've leveled up your game and can spot all the different manipulation, can see here where all the divergence is coming in, and know where the real money and the smart money and the long-term trades are. They don't know. Chippy, super chatted, $4.99. Keep it up and there I will, thanks. So that's the GME, and now we're going to go back and we're going to say, where did you come from? Where did you go? What are you up to? Price action, yo. So we start at the start of the 21st of start of today, right? Which is the 21st of October, Jamie. Turn off the extended hours, and as they can stop annoying me for once, and then go back to yes, start of today. So that's technically speaking end of yesterday. 15-minute time frame. Got these things on our charts. Don't know how accurate all of them exactly are with Fibonacci levels and whatnot. But just looking at here, you can see 382. Today's price action started. They'd already had a wick to this area. Your 200 period moving average and this horizontal level between here and there are interesting. It does seem like price action has rolled over from this most recent area. We talked about how this move like looked a little bit like it had been extended. Had this one retest of this previous move, but that move itself had such a big range on it that here when we consolidate up at this area, as you can see, I mean, just this little area looks like price action since January. After you get up here, you test the top a couple of levels, put in a consolidation pattern at resistance, and that involves testing lower levels. Sometimes this is the last bargains you get before price action explodes up again. Those ones below that are calling out for you here, looking at GME at the start of the day, were 183 for an entry. People were thinking 181, like that would be even better. Still hasn't met this line yet, this upward sloping line. We talked about how that was likely what was important because this would be defining price action. These three touches, not the previous bullish one. If you didn't see that video at the time, you feel free to go back and watch it. You'll learn something in all of my videos. We talked about how there was a line there, it likely wouldn't happen, price action would come in somewhere around here. And so like that's what you're looking at, these 1-2 levels, and the third one here at the high 170s, you know, or potentially looking for a full retrace down to 17827. Like in and around here is where you'd be like scaling in your orders. You've got your 236 of your previous Fibonacci there, and like as a long-term trade, maybe not necessarily today, but some point this week you might be looking at that, especially if you were referring back to the data you can see here on this, like with the max pain at 182, and we've seen prices up at 190 and so on, now saying like, yeah, totally. But most people are most commonly wrong, and like price action will get driven back to important horizontals, and those ones will be defined obviously in part by open interest, and that's represented most concisely in the max pain at 102 spot, 182 spot 5. So you'd be thinking that looking at the, oops, that's not where we're going. This is where we're going. To the future. So, as we say, to the future, here goes, right? Price action. You're looking to those levels. Your first 15 minutes opened up, aiming for that. Whoa, big bounce up again. The wick at the end of that was bearish. You didn't manage to test your previous body close. So there you're hoping for a 50 period moving average on the 15 minute to prove to be support, but you've not even tested the previous level of resistance really, so likely you come back and do test support. At this point you're hoping for holding the median line, that's, let's call it the 200 period moving average, but it was likely above. Having gone through that, now you're thinking you get your orders today. No, that's what you're looking at. Turn on your indicators. You got a little test there of your bearish control zone. You got a reaction. You're back above your 200. And even reclaim the 50 period. If you didn't get your orders here, you'll be thinking you might get them later. There's your 200. You failed to hold it on the retest. You're below your own moving average and failed to hold the center line, the 15-minute time frame. You've got this flash on the DMI here. Look, DMI, you've got his flash coming in, showing you price action likely returns there. Having made a move when this flash is off, that negative trend won that little fight at the time. Your ADX still very, very low. Likely it does come in with some volatility, more than you've seen in this trending move, touching into your bearish control zone. And that, not the end of the world, but not a very positive day. Just slowly retracing and retesting these important levels, coming in, getting that test of around 179, 180, what 60 is what it got to at its lowest. Lower than your previous low. Just continuation likely until you break your previous 236 and so on, and draw that in from here. That being the wick that you put in the morning, and this being the full range of today's price action encompassed in this Fibonacci, you can see that break the trend that you just most recently put in, you'd need to get back above 183 spot 10. And at this point, where would you say that's likely to happen? When? Well, not right now. You might test it, but breaking it and getting to the 200s, no. You've got a potential cross coming here on the 15 minute, on the 50 and 200 period moving average. Is that going to be the reason that your price action gets back above this 236 and then it responds bullishly, having been accumulated here, having possibly put in some sort of divergence and recovered this long-term demand line and then pushes up? Like that more likely to happen, having held all the important horizontals looking left, because these smart people are also buying it here at support, not resistance. That's potentially what's happening. And so you'll also get this flash on the DMI that tells you when it goes off, price action likely returns there. That could be ahead of that drop in recovery, could be of a fake out move above and a retest of this area. Even with this move put in at the minute, and all being downhill from that one high really was the day started, you can see that that means like that trend wasn't really in debate for very long. And so the discussion about whether it's over can be more concise. Like we're recovering that 236, I'd say, well, that great, that's what it does all the time. You're on a tiny little time frame here. And we were really just talking about, is there anything that, point in that exercise was, is there anything you could have done throughout the day so that you wouldn't have anxiety about when to take your trades? And that's like a good lesson for most people to learn, because the vast majority of all trades are taken when market opens because it suits most people's lifestyles. But what suits your lifestyle doesn't necessarily suit that asset you're trading, and the charts couldn't give two fucks what you're up to today, tomorrow, or how stressful your life is. So you can like work around that. It's definitely good because the charts aren't working around you. So that's GME, that's what you're looking at. That was the point of that exercise. That's the short-term targets to aim for, to look when you're watching price action and measuring the charts all day, and that would be the way to think about it when it's going on, with your indicators on that you understand and will give you some degree of security over your own technical analysis, because nothing's changed from those factors that determine why you would be in a trade. So you keep that on the picture on the lower time frames. On the higher ones, you look at how it's responding to the thesis that you put in previously. This is it testing the center line of the RSI. We talked about how it breaks out of this formation and most commonly tests that some reason, some area, whether it be here on price action, tested very deep low retraces in here and confirmed a bullish trend with a higher low than its previous move. But it was after the breakout of this wedge on the RSI, and you got that again on the second time that it put in a very similar formation to it's doing now. And what are each of those take up levels? Where there'll always be horizontal levels on price action, but that will put in a level on these indicators that measure strength of that trend. And at that point, it was the top of your bearish control zone proved to be the first area to retest. This one would have been a continuation of this trend here, perhaps, if you were to get that accurate. It probably is. Test of this breakout zone and put in this upward sloping diagonal on the way. This one, is it going to be a test of the top of the bearish control zone and put in an overall inverted head and shoulders? Possibly. You can do that on the RSI without having put in a trend and move to the downside on price action. And so does that look like what's happening? Maybe. Does it come and test then certain levels that hasn't dropped below here? You would think so. And like the bearish control zone and a retest of this trend line would be, in that sense, potentially very, very good entry. But that might not happen. You might just hold the center line here in your RSI, and it is a 4-hour time frame. So you could drop below where your current levels are on price action and then recover, and that might not be discernibly below it, right? Or it might be within its previous deviations from the mean when it has got close to it. And so you would say that that wasn't definitive, and it's to speak in terms of price action moving down at all, in which case you might say there is these entries, you know, there are these entries somewhere lower here, maybe even down at 160s. There might be. Test this D point again. And since you've got here and you look at this formation, now we're here talking about it and we're back looking at that Gartley to our left, this harmonic, you can see that we've had a touch of your D point. And how these most commonly work is that like this will be a trend of a change in the trend, and that will nearly inevitably come with a test and be a struggle at some point. And when you look at this and you look at harmonics and you've traded them for a while and you understand how they work, there are definitively different things price action can do from a technical perspective when you hit the D point, and it can either be a reaction or a reversal. That's assuming that the harmonic is actually playing out. And so a reaction will take you to certain previous levels of resistance or previously support and now become resistance in that time frame at least, or it'll take you to other areas where you'll test the previous trend, and then likely afterwards you've got some sort of, you know, depending on how strong that harmonic resistance is at that area and the reaction to it, it likely then comes back and does a second test before you see the reversal. So at first touch you see a reaction and then you see a reversal, and that might come in even potentially with a lower low on that part of the trend if that represents a higher low on a different time frame, and your indicators can tell you that that's an accumulation low. So like it may well be that the most bullish version of that Gartley comes with another test, and so you'd look for it at the time and see, are there terminal candles coming in when price action hits these levels? And it might be violent, right? It might be really, really violent, so that if price action does get here and bounce up, you know, you don't look to these long downwards, upward sloping demand lines. You might not get anywhere near them, especially if you're caught at something like a higher low on before you even get to the D. Put in like bullish engulfing candles, and then on the back of bullish engulfing candles, or perhaps an abandoned baby, a bullish engulfing, and then a third which forms a candle like the white 3 white. So some sort of thing like that. You can also say when you look at this RSI and to put it on the 4-hour time frame, not just looking at these 3 wedges, but this is like the 3 lows, the 3 trenches of accumulation that you see ahead of institutional moves or big smart money making long-term decisions, and that, you know, That's the way you look at technical analysis, and you construct a chart and you think about how to make money and be a professional trader. And you do get lots of other people, and I do it myself because I'm sick of other people taking credit for shit. And I'll say, well, now everything's aligned, and now GME is going to explode, or it has the potential to explode in terms of its volatility. Now, I might not have got it always right in terms of price action is going to explode to the top side, but I have in terms of volatility. You know, it's just unfortunate that that trend then went through another period of accumulation in terms of what we saw from start of June until now. But all of price action there has given people opportunity. The range has been huge in terms of what it's going to speak to future volatility when we break above horizontal. So we'll see how things go. And I do think that GME is very likely to explode sometime soon. Not because like one indicator says, wow, go, hey, this is amazing. But like even when I'm talking about it, even if you cast your mind back to Bing Bong and that, there are other things I talked about that were very important to validate that signal. And that's people obviously that pay attention and watch it a lot and think about those sort of things know that I was saying, well, X with Y and Z. And, you know, you need X with Y and Z. It's never like this one thing. It's just sometimes get an indicator that doesn't say anything for years. Or maybe if it does, it says something once, twice a year. And as Daniel will tell you, it said it then, and it said whispers of the same are coming. So here you go, you're on this 4-hour time frame, you're looking at that, you see the 50 period moving average, the 200 period above you. That's on your 1 hour time frame, which you never really got to look at. There was this test of the 50 and the 200 coming in, these two simple moving averages, this time frame. Likely to be a period of flux around that area for the next, 14 candle closes from when they first met. So a day or two more flux around there, and then we'll see what the reaction is to those parts of price action. Right, so I've got only done GME, and it came on now. It's already nearly. What the hell did I? How did I spend so long on it? I have to speed things up. Sorry if you're here exclusively for AMC, then I'm sorry because I'm having to speed things up. Not that that's what I'm doing when I drag things all over the place. Let's turn off the drawings. We're going to spend time on the charts. We don't need them all the time. Here you can see price action putting in those early typical moves. AMC does this similarly to GME's had an extension and consolidating at resistance. I wouldn't particularly be interested in drawing any formation on there at the minute. On the hourly time frame, seems to be a bigger picture, but it's the same. It's different time frame from what we're looking at there. Different move. This looks very much like it's just a continuation. This whole thing, right? It's just a continuation of this. It's just the same thing being traded the same way. Gone through this large consolidation period, it's done it at resistance, it's doing it again. Look at this and you see what was the previous move. Probably trade this on a weekly time frame looking for low entries. Oh, I've already done all this obviously, but there it comes in and you've got your two areas you're most interested in. Is at 44.44. You break above that definitively, you'll go to 72.89. That's what this price action says is happening here. It also says it's likely to be similar up here. And that's, as you can see, a low, and then a bull flag, a low, and then a bull flag. We've also got this formation, a harmonic. It's also bearish, but does have a D point to target, and that, you don't trade between C's and D's if you're a real harmonic trader, but you trade in this for a profit in any short-term time frame anyway, then you might be looking at that D and thinking, hey, it's a good reason to be bullish until we get there, at which point the story will change. Personally, I've experienced this sort of thing a lot and can see that actually what it means is that there's various questions to be asked. That is above the 886 and it's above your previous high. But when you get there, what are your oscillators going to look like? Are they going to be absolutely and utterly petered out higher than they've ever been, and definitely due to turn around, right? I.e., here you go, there's some technical analysis, FOMO, and believing in completely irrational things that the charts say at that moment are impossible, despite what GME might be doing, right? That's important. So I'd say bear that in mind, right? This indicator and this indicator in particular. That's the rocket crops version of this RSI and DMI, in particular the DMI. Anyway, I want to be looking at price action. Should have got up there for loads of different reasons. Not there, here. I don't know why I've drugged it off so far to the right, but you can see where to look for, right? That can come in anywhere, that D point. Oh, I mean, it can't come in anywhere. It has to be the right harmonic ratios, but it can come anywhere in terms of the x-axis. And along the way, you're going to go past the 618, it's at $50, and that's like the trend check along this move. It's very likely that you do get then a test of your long-term demand on this area here at your 0.5 or below, and that may well be slightly above where price action is at the minute. So that means over a long term, this might be a good place to buy, looking at the top side, depending on, we're only on the 1 hour, you've got this cross of the 50 and the 200. Previously you tested that, it was quite anemic, and then your reaction putting in this low, very violent with a petty recovery. That move up was good. Having broken that horizontal was important. Not because the fact that you're now below it again isn't a bad thing, because you had this test of the 50, and if it recovers beyond it, that is a strong test and a good recovery. That means you're getting back above 40, 41, and that area is important for price action. And then aiming back again to your 44, and that those two most recent horizontals in this trend, which was the downside previously, reacting and catching this high. Yeah, we did define this and see it's likely to continue down the way there. This formation, move within it, retracing, go below the 50 period. It having crossed above the 200 is good. It'll persist above there, and price action itself then, if it does turn around, will have something clear to aim for, and that to be a bullish thing. When you get above the 41, 44, the next time you're likely there for a while. They're above. The measured moves from these different things are all quite extreme from there. I'll not do that, talk about that just now. Where are you at now? 0.5 or no, you're at the 0.5 there. So this is testing that area again. Likely another accumulation. It is a higher low than previous. You have got a lower touch on your RSI, but you're at the bearish control zone. That's not definitively lower. It's also not definitively lower than there, and it's not at your most extreme low anyway, and that's where you'd compare divergences between. Plus, you would like to see this in the bearish control zone, or as other people call it, oversold, because then you'd be able to like definitively compare these two things to each other, or three if you want to include that one. You can see that this period of bullishness you had on price action, and your most recent one, and your previous biggest range of any singular move within this trend here, from around 32 to that B point at 52. Those sort of areas, they were all really defined by these sharp thrusts upwards on the rocket crops DMI. And when it was going to do them, you did have a previous test beforehand that looked a little bit like that. That's not different from now. This one was to the downside. Test worked the same way. This one similar again, and downside. So that was a violent move from a low area on the DI plus. So it was here, and that time spent a long time down there. So does the DI and the top trend not persist for this? Well, you haven't really lost. It's only been a cross, and the ADX itself is nowhere near definitive with regards to strength or trend. It's not even flat, is it? Flat. Yeah, flat. So yeah, and you've got a doji here, right? So this likely is testing higher, back up at the 50 period moving average, and then if it recovers that, that's a good test, and it goes on 41, 44, 44 bucks 50 cents. That's what you're aiming for in AMC in the short term and the medium term time frames. 4 hour, the previous levels of horizontal that you just most recently put in, so that's obvious. Then the daily time frame, they are putting in this inverted head and shoulders, it seems, but it can't be because you're not at the bottom of a trend, really, are you? Extended, not enough. Just accumulation, right? Let's see if this trend persists with the higher low at C. until you break that, you're looking again to put in a higher high, and that would first off be then B, and at that point you'd be looking up for this 144, 1618. Oops, look, you drag that right. Just on it calling out for you. That does look like it though. Looks like it's going to aim there. Ahead of it, it's got these important areas to break, 44, and then this golden pocket, 50 to 52 bucks. 53 bucks there. I think it's actually to 52 if I was run that more accurate, but that's where it's looking at for me in terms of everything on this chart. Positive cross, see if that milled up, but you know, you can see this touch again, come down MACD line, touch this signal line, touch the MACD line. Can't remember which color it changed now. You see that accumulate above, just below the center line, another positive cross, momentum will kick off. If you see your RSI from here, hold the center line on the daily time frame, or just go below it within the standard deviation and turn up again, and then capture its own moving average, you would consider that a really good test. At the same time as a momentum check would be really strong. And then you're also getting like some test on your Morty. Well, maybe not, right? I mean, let's see how that evolves. It's got such a strong slope that even though the next one might turn to be on a daily time frame, not a desperately high move either way, these could then flatten out. It would look like a test too. You'd get everything, get all your confirmation. You're not really testing anything before you even get to 36, 37. So positive there, and I'm looking for a top side on AMC despite whatever it's done there recently. Still looking for that. And then that is the AMC. Now we're going to look at DWAC. It's new to the requests. Oh, the T, yes. Digital World Acquisition Corporation. Okay. Right. Right. So for the entirety of this thing's existence, until for the entirety of this thing's existence until 4th of April 18, nothing happened. Traded within what could be considered its own range from 24 up to 26. Right, that's a considerable percentage if you're thinking about this. For some reason, people were trading it back then. I have absolutely no idea why. It only ever moved within its own trend about 20% before checking it or breaking it. And it had a meaningless existence. Chris. Whoa! Is that Turnip's company? Trump's company. Trump's, I can't read it properly. Trump's company. Not the Turnip company. If it was, I'd be dead excited. It's in fact a far more controversial company. Which, in its first instance of its life, though, was completely and utterly boring as shit. It was like, what I was trying to say there was, it was very, very boring. Then it metamorphosized into this beautiful butterfly, right? It also looks dead funny here. Oh no, Rocky Across DUI looks dead funny. It's just so funny. Like, I mean, I don't know, right? But there's memes here, right? There is, right? Anyway, so the Rocket Across DMI also says this thing didn't mean anything for ages, and then the RSI said it was never overbought, it was never oversold, it was just not doing anything. And then all of a sudden, it was awful. For some reason, it was completely and utterly pummeled. No idea why, but it was destroyed from 25 and it lost a third of its value and then started trading again. I don't know why. Dropped all the way down to less than a tenner and then didn't move. It was like absolutely and utterly not moving for the whole of October. Okay, so it was this is what's going on, right? And then it was Trump's company. Some point within this. This is the daily time frame, right? I'll go down to the 4 hour and get us. Okay, fuck. An hourly? That's something. Look, it's putting a doji there. But the event hasn't changed until something significant happens. How can we define that on this? Well, would you include this low or would you draw it from this open? Are you going to call that a gap? If you want to include the previous price action, you would. Using certain indicators like the parabolic SAR and that will do. Perhaps some algorithms that don't target this asset, but that it reaches into their sphere of influence or somehow manages to make it into a basket will be paying attention to it. So that's where we're taking it from. And this wick high, because, you know, similar logic, it happened. Right? It happened. And so a 236 test of 35, 37, 35, 19, 35 and change, right? Somewhere in $35 is likely, right? Is likely because you've put in a doji candle here on an early time frame, and that's the first distinction that this thing's made since it completely and utterly changed. Is that it's more obvious and more important than any of the comparative ranges between these, or even measuring the strength of this and looking at own previous retraces or drawing it up and taking them back because there weren't any. So this doji you're looking at has got a lower wick and nothing really at the top side. We considered a test down already. Then I think oscillate between this range and then be picked up at the 236. I mean, there'll be like an absolutely crazy way of trading this, which is to take it from previous all-time high, take it down to that low. You've only got to the 1272. You're going to go at least to the 1618 at 87 bucks. What people might think. You know, regardless how you feel or about your votes or other people's votes, which, I mean, really, how can you have an opinion on other people's votes? Kind of none of anybody else's business. But then up here, you've got your 2618 up at 330 bucks. People will be aiming for that too. Right? They fucking will be. That's what people will be. Especially if this is showing the volatility so far. If this continues, even if it does involve retraces down to like the 50% of that previous Fibonacci we drew in, which would constitute a test of the 50 period moving average, though I think that area is irrelevant for this thing in the short term. For 236, that unless it gets absolutely destroyed, because Dan, you do want to short it. I understand where you're coming from, and there'll be millions of people like it. It's just that's just like lots of money for somebody who has even more money come along and take by pushing the price somewhere, doing stuff, and it may well be that they could get like the right opinion on side to dictate, you know, huge moves of other liquidity providers, or you know, it might well be that there's deals going on here, there, in the next place that you don't see, and then when they come through the chart, say, well, that was always going to happen with price action, but and you don't know what they are ahead of time, and charts say now that like those moves that I just drew on, they look very possible. Like, why would you put like? I mean, if this was nothing in the world, I mean, aside from the fact that this actually does look like a toilet brush, Like there's no other reason not to trade it. From an like actual trading perspective, there's no reason not to. It's just about where to get into it at if you were looking for a move to the top side and that, and then if it puts in continuation of this decision making here at resistance, which is like some area of resistance. 1272 is the first extension you would look to if you break your previous high. It's just that likely then goes on again. I mean, people look at this as opportunity and they think, wow, that was an incredible opportunity, right? From $11 up to $44, and it happened in one day. That's an incredible opportunity. It'll probably do it again. And then it turns into like Shibu coin. And that's what happens. Pump and dump. Pump and Trump. Pump and Trump. It's the pump and Trump. This is what this is. The pump and Trump. So, yep, it could go up big amounts. Expect to lose all your money if you think you can hold this long term. Clearly got a lifespan on it. That's a bit obvious. There's existential questions with anything that's coming under that brand with regards to a value long-term perspective, right? Regardless, again, of your feelings with regards to your votes or other people's votes. Right? I say that with some level of cynicism that people would even care about other people's votes, right? So you've got your doji candle there. It looks like it may come in for a retest. I personally won't be trading this ever, but I can see that the 50 period might be a good area. Should it drop down that low, it could take a big chunk out of it there, and there'll be people that'll just like to take that for any reason other than it's a 50 period test. I don't think it'll get that low. I think the 236 is probably a buy on this. Likely it goes to the 1618 up at $86, so it might well be that you don't kick that, or there's a big chunk on the other side of it. But you know, 35, 60, $89. Right? That could nearly. No, it could just 2x tomorrow. It could. I mean, you got no dying off here, right? That's in the get the fuck out of my garden territory. Sure, it could turn around, but it could just stay there. Price action could just continue. This represents strength, right? That's what that is when your pedal is right pushed down, right? You're right on the fucking metal, right? And you know what it's like, right? That doesn't necessarily mean the car's at max speed yet. It just means that you're going as fast as you'll continue to possibly accelerate within that vehicle. And that might well be that the foot is still down on this thing. You know, it doesn't, you know, it doesn't, so what, right? It's a gear change. And then on again. That could easily be what's going on there, eh? Your center, you've got your own moving average on the RSI is already above the center line without the RSI itself having tested the center line. Things about this that are like vroom vroom, even though you know you might not want it to be doing certain things. ADX still got a positive slope, it's above 40, you know. And it's only made it up to the hourly time frame, right? There's just like, yeah, it could be a terrible crash coming in, and you go up to the 4 hour and you're like, what is that? And what does that mean in terms of percentage moves down? And yet it's currently at 45. So after post market, it's at 57. See what I'm saying, right? See what I'm saying? Has this been happening as I've been talking? You don't be watching me and trading this. I'm not. Anyway, so that was DWAC. That was interesting. Let's look at Sam. Yeah, yep. Where are you, Sam? Quite close. You're below the 50 period moving average. You've had a positive 4 hour candle there. There's a stop loss in the trade there. Is that what was that? Well, if it was that trade, then you're out of it. Or any of that. It wouldn't have been. It would have been here. And you stopped out and you're down here, and this is actually where you should have entered. Why have I got that on if the demand line's here? Maybe I had that previously on. What's going on? Maybe I moved it. Oh well, whatever it is. Doesn't look very smart, does it? Got your Rocky Outcrops DMI suggests the trend's been positive. You've got a unusual picture on the MACD there. Yeah, that's more clear what's going on in RSI. You've not gone back above the center line yet, nor have you broken above your 50 period moving average in the 4 hour time frame, which 1 hour time frame is also where you'll find your 200 period moving average. I have held your 886 there and broke back above the 786 and gone up to your center line. This is on the 1 hour time frame, right? Okay, I see. This is sitting in some sort of a turnaround, yeah. And then you've got bullish divergence on this most recent low. Okay, and you've got this text of these flux between the cross, the 50 crossing above the 200 on the 1 hour and the 4 hour. What does that look like with regards to the 200? So this thing's going up to $711. It just needs to get above certain horizontals on RSI center line. MACD going to have a positive cross. You've already had all the fade and momentum. That looks good on the histogram. That looks like this screams opportunity. That right? It's obvious. Same with this bit here is like, will I? And it's like no, I'm not going lower than that. Significantly anyway. And then you've had your positive. You've had that, and then as ADX nothing yet. That would have seen negative slope on the DI minus on a 4 hour time frame. 1 hour time frame, you've just won the trend cross. See that that's 1, 2, 3, and it's through. Okay. 30 minutes. You're only going to get that to the 200. Going to come back on 30 minutes, and the center line's going to get tested. This is going to come back 2513. Oh, post market is below there already, 498. That really all these things are already. I keep my money in GME and ignore DWAC. Good thinking, Dan. Good thinking. Short term. Later on, if you really want to short it and you're desperate to be in on that, and I'll keep an eye on it and I'll tell you when that is. So at the minute, it's likely not a short. Not for any charting reasons. So, you know, far be it for me to say a movement doesn't start around it. And if it ends up making people money and they do or don't support Trump, then great for everybody, right? And it's important to make a distinction between the share price of a company like that and the success of the company itself. The two things are completely and utterly detached at the minute. So, hope nobody dislikes or does like anything I've said because of those two things. Neither my feelings about share price have anything reflection on anything to do with it, nor does the share price have fuck all reflection on the value of the company at the minute. So here, you've got your 200 period moving average. Looking at SAM, you tested it. That was likely going to happen when you got this cross, but we're below the 200 on the 30-minute time frame. Momentum says that you're looking for a change back to the top side because you've been down on this most recent dip since this big drop. You've had increasingly lower, like decreasing amounts of momentum from that one move there. Same with the sell signal just as you crossed it. That's a good one. You'd have picking up on the ADX at the same time. Tested at least a bit of a move coming up. But then at the same time you had positive overall quite quickly on your RSI. So but your lead-in signal was at the cross of the ADX above the DI plus super tag. Take a look at it's NLST. Take a look on the OTC market. Yes, I certainly can do. NLST. Boom. Sorry, I haven't really interacted with chat much. I feel a little bit bad now. Think about it. Sorry. So you got your 200 period moving average, you got your 50 there. Your 50 is your entry, but you're below it already on extended hours. So let's turn that on and see what that says. Come back and you've tested that support line. Likely price is like the other one we're looking at. Likely price action opens up above that tomorrow morning at $500 again, which is above where you are at the minute at 498.64. I mean, likely it does. Below you've got your support here at 494.44. 493.72. I mean, if you can trade after markets, then you maybe get that because it looks like it's a buy at me. But then whatever, if I put this in, then I was also wrong. So I don't know. So it isn't distinctly different, and it does seem now to be where I would have put the buy at. So I don't know why. Anyway, you've just again confirmed that strength 30-minute gain pushing there. That's not as low, and that's not as low, and that is lower, and that's bullishly divergent as well. Back up to the 1 hour and see what that means in fact. Testing the bearish control zone there. This is also right at 18, I think 18, and then 20, 22. I think they're all important. Obviously 20 is, so we'll see how that reacts, right? This is a good level for that to turn around, your ADX to point up. As your DI positive starts pointing up, that would be positive. You've got a touch of strength on the momentum side of things, but not really when you look back to your previous low. And then RSI, you're at the bearish control zone, nice place to turn around. You had a previous high, lower low, another one, higher, but it flux, one with the trend change there. If this breaks this low moving average, it likely might its next previous high was above its previous high, both above the center line. It'll probably just go straight to the bullish control zone up around 65, 60 at least, at which point you will come back up and then you'll be probably above the 50. And so this looks like a good place for this to turn around. Not got any extremely loud buy signals yet. I'd wait for one. I mean, to be 100% honest, it looks like this thing's fine, and it's just like, does it matter where you add? I mean, I would. So, like, where do you manage your position? Buy it around 500. Take risk off the table at 523. Take a little bit more at 543. Aim for up 580. Like, this is like opportunity land. This is all opportunity land. Your 50 period moving average is close below your 200. Like, you're going to get a test of that 50 period moving average. Currently it's at the 382. You'll get that 382 move when you hold the 236. The 50 period moving average at that point might have moved down to 664 or whatever. That's a huge chunk of change from where you are here. And there's a cross. It's going to test that cross. Likely it doesn't stop. If it breaks this horizontal looking left, 382 coming in at $713, which has been so important for this, where it broke down there. I haven't tested it once. Doji, 3, dodge 4, 5 times before it went anywhere. It'll test it again when it gets there and won't be going through it all in one go. When it does get through it, it'll likely also retest it for support. But when it does get through it and retest it and then go through, then it'll go to the 200 period moving average to test the cross. That's $835 at the minute, and it's not going to get a negative slope anytime soon. I mean, look at this thing, 200 period back the way. Well, 2-day time frame. I didn't mean that. Daily. I mean, look at this thing. This is what you're trading in. It's like opportunity land. Turns out people like beer. Who'd have thunk it? You've got those entries here. Long term, these are great entries. Price action dropped there really quickly. So people who bought up here, what, $1,300? They're not going to worry about this. Likely they didn't buy it there. Likely they bought it down here at 300, and again they bought it here at like 150. They likely take profit at those high levels, especially when it's putting in such obvious divergence right here. Like, this is higher highs all the way up in price action, lower lows all the way down in the RSI, and then it breaks out of the bullish control zone while it loses its own moving average. I mean, it's so freaking obvious. If you were only using the MACD, you're like, oh, it's lost its positive momentum. And it looked good back on that, and you're like, well, yeah, it looked good enough to make that move. Afterwards, it was fucked. You got the RSI on, you're like, well, it was totally fucked. You got the DMI on, and you're like, it wasn't just fucked till there, right? That was like, yeah, you're good. This indicator kept you in trade for fucking ages, right? That indicator kept you in from, yeah, I was also like, here. Told you all the way here you're going to get a buy, then it told you there to buy it. And then it got you out here. It was very good trading with that one, and really good the way that persisted throughout that trend, even holding through the divergence because it knew it wouldn't break below previous support. And you do experience divergence in an uptrend where you break previous highs, so it's the context of an uptrend. So have an indicator like that. That's really helpful. Anyway, the RSI told you it was divergent, so you're also going to get a sell coming in. This one told you that that wasn't just a get out your take profit. That told you it was a sell signal with the change in the ADX and the cross on the DEI positive and DI minus. And you got it given it when you were breaking below the 50 period moving average. So you knew that the golden pocket on this previous, like this is measuring the move. You knew that this 236 from this one here was going to break. Then they were already previously beyond that. If you're at the 50 period moving average on this thing, you knew it was going to break. You weren't going to be held by this horizontal looking left. Hell, there was something on it, and it was a meaty move. I mean, that was a big drop. Sure, there wasn't anyone that could have predicted the reason for it being so severe, but like the severity of it itself was kind of predictable. Like, take it on from this area. It's low to high. Then it's only coming. Oops, sorry. Only come into the golden pocket, and then the 200 period moving average on the weekly time frame, golden pocket, and that's when it's been absolutely decimated in the ring. At this point, it looks like things will turn around, and when it does turn around, they'll get a positive slope on the DMI, DI plus. Your ADX is already in incredibly strong territory, so even if it does start pointing down, it doesn't mean anything. It's still going to go crazy. Price action. And then your RSI recovering its own center line on the weekly time frame, making its way out of the bearish control zone, and at that point having made it up towards a horizontal resistance. It's pretty obvious that people are going to make money on this unless something crazy happens. That's a Sam. That's a Sam. And then ALAHT, is that what was on the next tab? Bama jamma, bama jamma, badama nama, nama, badam, bama jamma. Look at this thing. Whoa. Look at that gap there. Whoa. Whoa. I go to more manageable. This isn't more manageable. Turn off the drawings. That's easier to see what's going on. Okay, so you got a gap, and it's up at around $40. Might be the 420 thing we was talking about, Bimajima. But that's what's brought me here at the very least of things. This is perhaps. I mean, that's just so funny the way the 50 period moving averages, 200 period moving average, and like the gap. It's like. Anyway, so you tried to cover the 50 here, daily time frame, pushed back up out of the top of this zone, put in your bullish divergence, chunk of it there, boom, 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 3 of them. Moved up. See where that was. Draw your Fibonacci from your breakdown area, or you can do it from the top here. I'm going to start with the one before the gap. Yeah. This is hard for me to see, so it must be fucking impossible for you, but sorry, it's the way I'm doing it. The 236 there is at $15. Right, so that's the target you're aiming for, $15, and you're looking for open closes. Daily time frame alone, you've had one. Not had open, close, open. Not had it there. You need to still, the daily time frame is still enough definitively to say open, close, open hasn't changed. And you want it above your 236, which is at $15. That whoops, you want to happen to HT, and you want it to happen sooner rather than later. You have got a turnaround, a positive stance on the RSI and the bullish divergence. You've then got this retest afterwards from this move. That's not so bad. In terms of a drop down, where was that? Above your. Where's this short term? Useless. That breakdown point there, $16, 236 on its area, and you've gone retraced to 786, but not even got to the 886, right? So anywhere or even they're down there at like 12. $75. That would be likely an accumulation low. Persist above the bearish control zone. Got a flash on your rocket crop DMI coming in, so when this disappears, where will price action be at? Like really turns there, does that speak to a further move down? If it is left, that would have to break so many important levels. 1216 have to break before that. 1277. 386, 1275. That would be the next buy. Unless you're looking for a move and it's like slightly deeper retracing, which you could do. And looking left doesn't necessarily say that isn't going to happen. You know, you're already below important levels in this part of the formation. Don't have anything. Yeah, it looks like it's likely going to do some sort of jolt and then it'll be an accumulation. Hopefully it's a higher low if this is like pushing down. Either that stops here at the 786, which comes in really at 1310, and you know, you've touched it close there at 1302 earlier today, and then hold in that area, push back up again for a 236 on this drop down, be around 6185. Would that be it there? This one likely got that Fibonacci already. 236 comes in at your 618, yeah, at 1374. And that's where you're looking to on the top side. So you're looking at 1277 going. So 1317 close where you are at the minute is also a level. Then above it at around 1370, 1360. And that'd be interesting if you could break those levels and start putting in significant timeframes, because you've got this downward sloping supply line that you were previously looking at in terms of an inverted head and shoulders and seeing if this was a reversal pattern at the end of a trend. And so you still want to look, I still would look to that to be the move, but you would then have tested a previous low, and there's no definitive area for these things. Like, they're stupid anyway, inverted head and shoulders, I hate them. But like, there is no definitive area for the right thing will come down, especially when it's all squiggly wiggly like that, right? That's why they fail 60% of the time. That's not just people drawing them wrong. Anyway, you do these, get these normal, you get tests down here of higher lows would be good. If it's an accumulation low, that would be great. You have got a potential for that with your RSI being above the bearish control zone. The momentum isn't saying anything particular. You do get a move, you could get a return to that point. So a test up or down and coming back to it. Upside, that's like I say, cents away really, but then percentages is significant enough. And then looking left, getting back up above 1550 is important. Now, if you do manage that, you'll have recovered your 50 period moving average on the daily time frame, and you'll be looking at that as a potentially really good entry to cop up and fill that gap. And there's areas before it that you'd look to, looking left at 19 bucks. You're also hitting Fibonacci extension as where you are on this previous move down. That'll be a take profit area for some people. It'll be a question mark where if it gets above there or not, what happens next. If it does, you get above these other levels. Don't know why I've drawn that white line on there in particular. I don't think it's actually all that important. Then you'll be looking up to get this 200 period moving average. 2414786. Not enough reason themselves. 1618, 2618 here. 2618. Top side of that's at 28 bucks. That sort of area, you know, within wicks and body closes below your 200 and a bit of test, and that's what you're looking at for this thing, depending on how low it goes beforehand. And that, and we said the most recent area, like the most closest areas where it would look interesting. But I would want to see that RSI persist above this bearish control zone, and then look to fill your gap with what you had left on the table, which would be other people's money at that stage. Everything you'd invested could be way off again, and a stop loss and profit. And if prices do make it above this area at 22 bucks, that's where my stop would be, because price action just below there, price action could test that again and then go on up again. Who knows? This thing, you know. Question is, has all the damage that's going to be done to it been done to it? And like a lot of things tell me it has. That's what I'm looking at there. And then we're looking at NLST on the OTC markets. Boom, 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 boom. How are you doing, NLST? my friend, my good old friend LST. Netlist. That's how you make your name sound old-fashioned, but your chart looks fantastic. I don't know about this, but I like that. Love that. That was fucking beautiful. What a beautiful MACD signal that was in daily time frame. Yeah, 50%. Nice. 50%. And it's so obvious. Like, there you go, there's 50% of whatever you put on. It's 50%. Like, incredible. It is incredible. Trading's the best. And then there you had that cross at the same time, so it was like 30 or 50% and a pat on the back. And you like worked through as well. That might continue. Look at it right. I don't know if this is exactly the time to enter, because test of that center line or this moving average. Above your 50 though, and there's that entry 546. Does look like a 546, but I haven't done any TA yet. Can't see that right. So up and down, high to low, coming in at 420. Is it 420 as well? Is this what it is? Figures. Wait a minute. Is there a gap here or something? 420. Hey, look. Ah, what is that? Is it? Hmm. Hmm. I've got drawings on this. Did I just draw them on there now? Oh, yeah, that was just Fibonacci. I didn't have anything on it before. Yeah. This thing loves its little gaps, eh? It's like... And then if you got there... Like, what else would stop you? I mean, there being 589. This thing's currently 6.49, up 5.27% today. Perhaps putting in sort of an uptrend, it could be interesting. Having put in a downtrend since summertime, end of July, but over its lifetime, haven't been in a really good chart. You know, it's like this is a very good chart. Having come from its low and then retested that at around 10 cents and to be now at $6.49 is obviously quite good. The signal you're given was quite clear. It has put in a previous move, not all that dissimilar, from 13 to 7 plus 4. Not getting much back from the trend before then. This is it putting in, you know, definitively new behavior. I mean, it's been up at 11.54 before when it first started. And so thank God some people that first invested in this have now finally been able to get out with some of their money. It happened before 2008. It got absolutely fucked in 2008, right up until March 2009. Gave me my line that asked for then. And then you had the retest of that 2 more times and it went on again. Those were both very good buys. The second time, incredibly bullish, obviously. The divergence at the time and the move afterwards. I mean, then your MACD signal here around the start of September, end of September, mid-September. Where was it exactly? Started dying off in the last couple of weeks. September, you got in your move. Still got that positivity on that time frame there. That's the 2-day. On the daily time frame, where was it? That loan returning 14th. across. Pushing the trend down again here, started on the 24th, and then 10th of September was the low in between here where your DMI picked up again. Now you've got that positive cross on the DMI, you've got your cover in the 50 period moving average. At the same time, you've managed to go through your own moving average and through the center line. This may test its own center line RSI again. That's what that thing looks like to me. It depends what happens here. If it breaks into the bullish control zone, you can forget about this retest. It'll be a retest of its own moving average. At the minute, it's a question of does it test its own moving average or the center line? And I don't see it breaking through and back into the bullish control zone right now. On the top side of this, you've held the 236 on a very good move and a good recovery, and you then likely test the 618. That is your horizontal looking left of support, and this thing's going to go to $7.24. That's another percentage chunk on this thing, right? Up at 740 maybe. It's already done a big chunk of that move from 440 odd, 420. What was that? 420. So nice. I like that. So nice. And then to go to the 618 afterwards. I mean, it has to go to 669 anyway, doesn't it? What was its high today? 651. Well, it hasn't been there yet, so it's going to go to 669 or 699, right? Because it just has to. It has to go up to 699. This is going to 699 because it came from 420 and it's going to 699. It just so happens to be doing that. It is going from 420 69, but not 69, 6.9. You know what I'm saying? And it is doing that. It just so happens to be doing that. It's dead fucking funny that it's doing that. That's hilarious. Though I wouldn't trade it from here to there. I'd wait for a retest of the 50 at $6, or else I'd wait for a better test of the 236 and around 525. That would look like a bearish move, having broken through the parabolic SAR on the daily time frame. But I think it'd likely bounce back up again. Alternatively, wait for it to hit 367 on the 200 period moving average, and if it was to do that, that's not going to happen at 367. It's going to be when this 200 period moving average makes it above its previous low here at 425, and then you'll be looking at another sort of 420 entry, and that you could take profit and enter again on this unless it explodes up again soon, which it might well do. But I can see that it had 1, 2, 3, 4 tests at this area before, so 1, 2. Give it 3 or 4 more below the 236 or above. Not really important yet. I think this is going to go up again. That positive cross suggests it might happen already. Might have already started making its move. RSI says it has. 4 hour, like this perhaps does now constitute some sort of a test at the 200, holding below it. Go back to your 50 at 587. That's your 382. Still would love the 236 at 520. I'd love a 520 there on this one. Interested in that myself right this moment. Not going to give me it then, I'll just drop it on myself. Well, thanks, Bad Memory Jammer. I shall have a look out for this. And supposed to look at Bitcoin, but nobody asked. Now I'm exhausted. Add alert on that. Yes, it's not going to show up as you expect. Shut up. I do expect it to be like that. Right, so that's it, 515. Whoa, it'd be nice to get that entry. And then see how it goes on. You can manage your risk there, but you got like, well, I mean, that's a tough area to do it. You'd also love it actually even better. And maybe if you got in at 432, I'll keep an eye on that there. 428, 432. Not going to get that again with those wicks. These body closes likely is that. Let's go down to the 1 hour time frame. See what that would be. Yeah. Okay, that is the entry. There's your gap. Has it been filled? Perhaps not, right? 510. Might even go down to 510. That's be where I'd take this. Get me there, please. Maybe that is the 236 on the Fibonacci anyway. So that'd be the area I'd love to get at. You're already at resistance here, having made this bit of a move and looking at that area. Break above it, then it'll be support, and then it'll be good. I'm not saying that isn't going to happen. There are other areas to aim for that was like I think it might go for, right? I put these areas here. It's just 699, but it's just if I was trading it and wanted to buy it there, and in which case I don't care if it goes there beforehand. I mean, the more bullish it is, the better. It's just that retrace there would be a good entry. If it doesn't get there, then there's a 250 that I can go on in future, having it confirmed its bullish moves, and that'd be good. It's just it looks like it may already have done something good. Really pretty good. And then continuing on, and if it is, you know, representative of what happened here, and you're looking at a similar move again, that took you from 4 to 650. You'll go up there. You'll be at 6, 7, 89. You'll be up at $9 again as well. It'll take you $9 like as well. So $9 is you're going to guess a 30% move. You know, a 30% move is a lot. And you might get a good entry slightly lower than where it is at the minute, in which case it's a lot more than 30%. And I do like a lot of chocolate on my biscuit. I very, very much do. Right, okay. How did it go? I felt like there was loads of information in today's stream, especially for the GME fans who were complaining at me a while ago about not doing enough of it and not talking enough about it. Quite a while talking about it now, huh? More than anyone else has put considered time into this on the internet in the last couple of weeks, and likely more than anyone has put considered time into doing technical analysis on GME on the internet in the world ever, likely. No joke. So thanks for everyone who persists with me, because sometimes YouTube doesn't actually help me, like kind of counter against what I'm trying to do. So yesterday's video, it didn't give me any notifications to anyone. So if you found it, congratulations. Thank you, Bad Mama Jamma, for the good questions and the nice stickers and that. And good to see you, man. Fucking love you, brother. And yeah, yesterday YouTube really didn't help me out at all. Like no notifications and that. And then I looked at my video and it had 65 impressions on people's home screens. 65. Not only did you not get a notification, did it not show beside my name that I was live when I was, but also of the 20,000 people who've subscribed to my channel and said I'd like to see Tradespotting on my homepage from time to time, because that's what the fucking subscribe button's for, YouTube showed it to 65. I think that's a disgrace, you know. Like, I put in a lot of effort and YouTube makes a considerable percentage of the money I make, even if it isn't changing worlds or whatever. It's still like a big percentage to me. It means a lot to me. And I just think that's so unfair, you know. So I rely on you people, like, looking for my stuff, like I do. Jan. So thanks for that. Thanks, everybody. Can't really say how I actually feel about that, because thanks for all you do for us, Tradespotting. You're welcome, Homer. Thank you, everybody. I'm tired now. Thanks for watching it. Please hit the like button. It's really appreciated. Thanks for everybody tuned in. Thanks for all the support. Thanks for all the likes. Tomorrow is Double Remember here. Thanks, Wilfrick, you legend. Most of those faces. I always check the minute I get home, Jamie. Thanks, Kim. Yeah, even that's what I'm saying, though. People were checking and it still wasn't telling anyone that I had a video out, and that was so white. So white, like. Hey, and I feel sorry for people who don't have, like, you guys are awesome that you came and found it, and in the end, despite YouTube only trying to tell 65 people about it, not when it was on, but like from then till the next day when I woke up this morning, 104 people managed to get to it. So twice as many people as YouTube ever thought was even likely to happen. And that's credit to you and the 1,000 people that ended up watching it. It's like credit to the community and the audience and that. So thanks so much. Smaller YouTubers couldn't fucking, and I'm small anyway. I don't like people like. I don't know how people can survive with that crap. Like, it's like, anyway, thanks. Because it's not for want of trying. You know, I say GME fucking hundreds of times and I write it in the description, and everybody who could possibly want to know about it in real life will have some idea of there's this Tradespotting guy and that. Yet YouTube's like, I don't know. Anyway, thanks. So we also covered AMC, DWAC, SAM, AHT, and NLST. So it was a good day, good Thursday. It was great to see. I don't see Double Remember there, so I'm definitely chopping his head off tomorrow. Thanks, Joe. Great to see you as always. Freaking legend. Thanks, everybody. There you are. Lisa. Thanks. Thanks, Lisa. Everybody else who makes the chapters, really appreciate. Kieran, your legend. NRM, Stephen, Kimmy, Chris, Corey, Jeff, your legend. Wolfric, Dead Money. Yo, looking at things with Dead Money, different things people use on clips, like from like things happen, like PBS Spacetime and all. They've all got cool little graphics now. It's like, whoa, we could use some of those things. Loads of stuff like that. Look cool as. Unless my stupid stupid but green screen backgrounds when I was doing it at the start. They were so bad. What's up with that, do you think? What's up with what, Chippy? Facebook and Snapchat too, what? What's going on at the minute is PayPal decided that they wanted to buy Pinterest. Like, I truly think this is a bad value decision to be paying 40 odd billion for Pinterest. I think it's a bad decision. You can see what they're thinking, right? PayPal want to consolidate social commerce because they understand the value of a closed network, even on the internet, and they think that they can track customers in an ethical way by not going cross-platform or using other nefarious techniques or out of favor social media companies, and they're likely soon to be defunct and out of no longer usable ways of tracking you across the internet. They want to then have a social media element to provide value to their overall ecosystem, right? And I did a dissertation on this at university, and it was cited by a number of different social media companies since, about the value of customer relationship marketing when it's underpinned with social networks. And if you can then apply on top of that a really good a really good shopping channel, then you can make a lot of money. And that's the play that they're trying with Pinterest. It's just not a good value play. I can see what they're looking at. I can see how they could probably think, like, you know, there's a degree of value in this brand that isn't quite yet expressed by the way Pinterest are doing it. Yeah, I'd agree with that. But I don't think that it's worth the price they're paying for it because of that. I mean, that'd be a future move. And I also think there are other options too. And because of that decision, that idea that this large company, PayPal, would make such a big move in their history with the things they said about Bitcoin and the other ways they've moved things recently, you might think, wow, awesome. And so the price of things jumping a significant percentage up to those areas where PayPal said they'd be interested in paying for it. They're very interesting, but I wouldn't completely and utterly bank on that particular deal happening yet, just because I've watched Pinterest go through things not dissimilar to this in the past with Google. So I'd take a pinch of salt that until I see things actually done. I don't think the real interest in play is that consolidation anyway. I think there's others that have far bigger moves on the go. And like, I couldn't give two flying fucks about Facebook. It's stupid nonsense, crappy thing. And that's not just because of Cambridge Analytica. It's like loads to do with the way that guy runs his company. Loads of it. And like Rocky says recently, wouldn't it be nice if those people who were financially competent were also morally competent? And good message. He's a great brother and does great TA, so check him out, Rocky Outcrop. Check out his channel, subscribe, and learn how to change the world around you. And also be good to other people in chat over there, who are all really good people. Love you all. Great seeing you. Thanks very much for tuning in. Didn't get much time interacting with the chat box, but that's because I'm putting out so much content and that I'm trying to do help for people. So even if YouTube doesn't like me, I like you. Thanks. It's appreciated. Every minute of watch time is appreciated. It counts because the algorithm does not like me. Oh, yes. And remember, let us all remember, and never